YouTube, what's going on? This is TerrenceRe, and this is the morning setup. We're gonna talk about what's going on this morning. I'm gonna take you into the opening bell, and I'll go over a couple trades I got, and maybe we might even get some scalping today. Market's gonna open up right back after the buffer. We're gonna get busy, so stay tuned. All right. So what I'm doing right now, we got about, if you look up at the top of the screen, you probably can see the countdown that they have on the Thinkorswim platform. Got about a minute to go. And I'm gonna do some things over here. Like I said, I like doing a little charting on here. And so I'm gonna use both. So hopefully I don't get a lag because I got both. I got Tastyworks open and I got Thinkorswim. So right now, what we got going on? We wanna Just got live news up here, right? So if you see me, I'm clearing my filter up here for the news. Um, let's see what I want to put it on. I'm coming down here. I'm gonna go to S&P 500. So that's gonna show me everything, all the news for the S&P 500. Big news stuff. You see it up at the top, right? And right after the bell, I'm gonna come back and talk a little bit more about that. Looks like we got about 30 seconds. Right off the bat, let's close this up. I don't want to be distracted. So we got the VIX futures are down. So we got a positive open coming up. We got the S&P futures are up. Up about 27 handles. NASDAQ futures are up. The Dow futures are up. The Russell futures are up. Bonds are down. Now, as we get the bell, that was an extended bell. You had both of them going off. So as we see that right away, that gold is up. Let's see what happens as the market opens up. Because if gold is up, has a bid under it, and the market has a bid under it, that's kind of weird. One of them I would think that would give today, right? And if you look at my screen, you see some stuff that I have up at the top, right? Advanced decline line is 364. So the majority of the S&P 500 is up. So that means probably like what, 120 something that are down. But yeah, and you see the numbers growing, 373. So obviously right off the gate, looking at this, I don't want to get short. I'm talking about intraday. If you're doing any type of intraday trading, I'm going to stay away from short positions right away. The tick is up. Now that's just something else, like, that's another little indicator. Basically, it's green. The tick is up. I don't want to go too much into that video. I had to show you another little indicator, but you can put that plot on your screen. And if you message me, comment on the video, and then a lot of this stuff I can show you how to put on there. I can make a separate video, or I can send it to you, like a link or something. IV rank is up. Now, what I have on the screen is ARC. I did get long yesterday, ARC. I do see it coming down right here. I'm going to drop down and go to let's take a look at the 1 minute chart. And I see ARC is coming down, which is, I don't want to see that. So hopefully it turns around. I did get long ARC yesterday going into the close. Now, the option that I bought an option. I went out I think like 79 days and bought a call option. And I'll show you what I was looking at. So on ARC, I'm going to close this up, move it down some. Let's make this big. So what I seen, if we go out, now ARC has been getting beat up. And I'm one of those type of traders. I'm a technical trader, so I trade what I see. So I don't have anything personally against Cathie Wood, and I don't 100% believe in Cathie Wood. I could care less, right? I trade what I see as a trader in the chart. And if you look right here, this was the low. and this low was established back. This is a weekly chart. This low was established back during the COVID pandemic, right? And right in here is when they started, when the Federal Reserve stepped in and started doing a lot of, let's say they were already easing right here. We already had low interest rates, but they just took them all the way to, I think, zero around this time. And then they stepped into the bond market and started purchasing and doing a lot of other things, right? So you can see the rise. And ARK, this particular ETF, is comprised of a lot of growth stocks, right? And so you can see it going up. And right around in here is when, when the rest of the market start going down and growth stocks start getting hit. So what I did was I just did like a fib retracement, right? From this low to this high, from $33 to $159.70. And so basically ARK came down and hit one of the fib levels right here, which would be probably a good support level, right? Here goes the high, and it hit right here. And so now I'm going to come down and break this down, come back to the daily chart. So I just want you to know from that low to that high and what I did. So when I come in and I come to the daily, it looks like it reacted off of this level right here. So we got this level, we got a reaction. Big green candle. Look at this candle, right? Hit here, boom, up. And then you get these three candles here. And so what I did then was I put a fib level in. I'm like, yesterday we got this hammer candle. And so at the end of the day, I seen it wick. And I'm like, well, maybe we're gonna get a nice move up out of here. Right. Doesn't mean that I think that over the long term that ARK will um will go up over the long term. I don't think that. But do I think that maybe and I could be premature on this setup? It's possible. But do I think that it's possible that we could get a little bounce right here and maybe get up, maybe take this high out somewhere up in here, right? Maybe up in this level. I don't know. So I got long. I took a shot. Now I hadn't been doing those trades in the account that I have on YouTube, but I felt like that was a good shot to take. And it kind of looked like we was gonna get some action up. But now you can see that ARK is going down, which I don't know how long that'll last because I think one of the largest holdings in ARK is Tesla. And Tesla has opened up on the day. Small, but you see Tesla has a similar, you see this candle in Tesla? Now let's go back and look at that candle in ARK. Where are you at? Where are you? See? So the chart looks similar, right? So this is what I saw. So obviously I'm guessing that if Tesla doesn't hold up, then the ARK won't hold up. And you can see look like Tesla just turned red on the day as well. It's right there at it. So I'll watch it. Now the call option that I bought was was at the 70, like I said, I went out 79 days. I'm gonna switch over to the Tastyworks platform in a minute. But as we can see right now, the advanced decline line is balanced out a little bit. We just got 252. So you can see that the metrics kind of changed from the opening. But I would, the rule is a lot of times with day traders, and we're just talking about day trading, right? Or intraday, is you don't want a lot of them. The rule is that you don't want to trade during the first 30 minutes because anything can happen. Like, you're gonna have that overnight shakeout. So that I would think that right around 10 o'clock today, we'll see how the market's gonna move. But still, the financials are up. Excuse me. The financials are up. Come on. The financials are up, and a lot of times I had to edit that out later. So I do everything live, so you're gonna get everything. The financials are up, and when the financials are up, you generally don't want to short the market, right? XLE, let's see, which is energy. Energy is down. Let me see if I can pull up all the. So if you look on the screen, now what I have on up is the speeder sector ETFs. And you can see that they're all green besides energy. And there are 11 of these, and these 11 sector ETFs are in the make up different sectors of the S&P 500, right? So you got financials, energy. I think XLK is technology. XLU is your utilities. And so the only one that's red is XLE. And that's because energy has been beasting. So that's another bullish indicator on the day. This is something that, just looking at the tape right now, this is a bullish tape. So if you're going to do any intraday trading, I would think that early, in the market today, we got a bullish tape. Let's take a look at the SPX. And you can see, if we look at the SPX, so my screen is a little slow right now. There we go. When you got both of them on here, I'll probably end up closing one of them in a minute, just slowing me down. All right, so let's look at the spot. This is an hour. So I'm looking at the SPX. On the hour, you can see right here on the RSI that we got a little bit more room to go before it's oversold. So everything I look at is showing that this is a bullish tape, and probably by the end of the day we'll be overbought, excuse me. So I'm looking at this area. I would think that the RSI will continue to its overbought. So you just look at whatever stock you in, try to find a stock that's green right now. And then I would say hold, go down to a lower level. We go down to the 1 minute and look for a setup. And then whether that be buying shares or what. So like you're looking on the 1 minute, you see you gapped up. You see it pull back to here. So if you wanted to do some, maybe buy call options, this would not be a bad place to do it. Get long some futures, not a bad intraday setup so far. I would say FANG is green. Tesla just went back green. I'm looking over here. So, my early on, I think we're gonna have a green day. Barring that we don't get any bad news out of Ukraine. Let's take a look at the live news. Let's see, Kroger. So I like to look at the news. Not that I care so much as that I care about exactly what the news is, but I know if I see some news, like Kroger stock jumps on upbeat earnings. So let's go take a look at Kroger, because you might get something to trade there. I think Kroger's ticker, is it K? No, that's Kellogg, which Kellogg is up. I think it may be KR. Let's take a look. Here we go. Kroger. Kroger is up $4.33. It's beasting, right? We probably missed our opportunity. Probably would have been best to get in right here if you're intraday trading. Now, if you get a pullback, if we can get a pullback somewhere into here, if you get a pullback and then you want to buy the dip intraday, and you say, well, how would you do that? I mean, you could do it with, if you want to do it with shares, you can do it with shares, or you can do it with options, right? I'm not opposed to jumping into this with options. Let me pull up my intraday setup. And I just got a few more moving averages on here. So I probably would be looking at, this is a 12, a 26, and a 200 exponential moving averages. So I would probably look for maybe a pullback into one of these, to touch one of these, and then I would try to get long if I was gonna do some intraday trading. Right? We probably missed the move. We should have been on top of this You got to be on top of stuff like this before the market opens. Meaning you would probably have to look at, you can come to Thinkorswim or Tastyworks and look at earnings. Like you would come over here and let's pull up, let's see if we can pull up some public. We got percent change gainers, percent change losers. We got, let's see, lovers and losers. So analyst upgrades, analyst downgrades, post-market movers, pre-market movers. So you could come to pre-market movers and look there. You can come to, they got, they got an hourly report, social activity. These are different ways that you can come in. And then I'm gonna I'll also go back to Tastyworks to show you some ways on there where you can find some easy stuff to trade as well. They got gap up and gap downs, and you can pull up and you click on any one of these over here and it'll change it and put it on your watch list. Now, my personal favorite, I don't even know if this is the, I don't even know. So you don't have this one. This is one I got. And I got this from Don Kaufman. It's called the Don Sizzle Scan. So I come right here and this is going to let me know everything that is sizzling according to the metrics that we have or that he set up and then gave out. So this one, let's look at this right here. Snow, obviously, getting killed right now. Look at Snow. This one showed up and it only shows up 10, like 10 that are sizzling. That's so, and that's gonna have a lot to do with like options. So the options are heavy in here right now. You see it's down 12%. This right here I will stay away from. If you're not, I'm gonna go to the daily and take this back out on the daily chart. Look at this. So it dropped from here. What's that? 260. What is that? 260 closed yesterday at 264.69 and came all the way down to 230. Well, that's where it's at now. So it looks like it's trying to close that gap. I doubt it. It'll probably come up into here somewhere. Let's see. I'm guessing it's going to find some resistance right in here. You guys can watch it and tell me if I'm wrong. You're going to get some resistance right in here somewhere. That's my guess. And when you get that resistance right there, right here where this candle was, you're going to get some resistance. And then you'll get a little formation up in here. And then you may get a little bit more to the downside. So I would be careful trading in something like that, right? Where you have that big gap, you could get killed in it. So be careful in something like that. Like I said, trying to find something right now that you guys like, some scans that I got. I got a contrarian scan. This scan right here is everything on this scan is something meant to short. So like you're looking for something to short, like to buy some put spreads in. Of course, XLE is on here because it's look at it. So you say, well, why would you? I'm not saying to short energy at this time. I probably would not short anything that has any type of relation to what's going on with geopolitics right now, just because it probably can stay extended a little bit more. But it's on the list. What's something else? You guys know from my account, I did short AbbVie a couple weeks ago, and I was losing on the position. I finally closed the position out and just took the L on it. Because I think I got short like back here somewhere, and it just kept going up, right? So I just bought a put spread. I think I paid like 91 bucks for it when I bought it back. I think I bought it back for like 40 something bucks because I bought it back on this down day right here. So I didn't lose the whole $91, but I took that L. So sometimes you get those moves, and sometimes you don't get them. Let's see something else that might be. See everything on here. You see how it's extended, like this right here. These are these are things that come up on this particular scan. And this is a scan, right? So it's set up to show me stocks that are overextended that I may want to short. Like look at this. And you got something like like a megaphone or something like that, like an expanded megaphone or an expanded triangle or something like that. And so you got a touch here, and then right there is touching so that you got a trend line from here, here, here. So you could get a little pullback. And when you buy these put spreads, which is what this is designed for. So something like this, if I was going to do this, and I'll take a look at it later on during the day, I will come to the option chain. I'm coming right around the sweet spot for these trades for me is like 30 days, 30 to 35 days. You can go further out, 40, 45, but I don't want to need as big of a move. The further you go out, the bigger the move down that you're going to need to make money. So I would be looking at these two, 29 and 36, right? And let's just take the 29, and I probably would, what would I now? There's no liquidity over here on the put side. Got a little bit over here, but so it's the option markets do not look good in here. So ordinarily, I wouldn't advise anybody to trade in here. I would because I know what I want to spend. Right? If I did a $2 wide, so I would come here, buy that $6 one. Now I'm holding over here on Thinkorswim. You got to hold the control button down. So I will click here on the ask because I'm buying this put and then sell this put and see what they see. I wouldn't pay that, and that's the reason why when you got to be careful when you're dealing with illiquid options. You see how the mid price come up with 115? It's a $2 wide spread. You don't want to pay anything more. You'd have to penny this down. You don't want to pay anything more than $1. And I probably wouldn't even come in at $1. I probably would come in at 95 cents. And then I would see where how far off I am, and then I probably would penny it up for $1. And I don't want to pay any more than $1. Max $1.05 for a $2 wide spread. You know, anything over than that, you're gonna lose money over time, and you can't. And that's how you lose money by trading illiquid options, not knowing what exactly how much to use or how much to give up. You know, because whatever you give up going into the spread or going into the trade, and when I say give up, I mean like as you're pennying up to pay more. Remember, you got to try to get out of that trade. And when you're trying to get out, you're gonna have to give up some getting out. That's why you want to stick to those liquid options. And you see how, well, and I'm gonna show you an example of a liquid option. Liquidity, 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 liquidity. Liquidity is the main thing when trading options. When trading anything, to be honest with you, is liquidity, right? When you're trying to do any type of buying and selling, liquidity, you can look at liquidity as far as like buying and selling houses. You want to be you want to have because if the market's not good, then it's hard to get off your property that you're trying to sell. So you want to be, so it's the same concept as in trading. You want to be in liquid options. Now let's look at Apple. I'm taking you to a stock that I know is liquid. Now look over here. You see open interest. Look at these thousands of contracts on both sides, right? And that's what you look for when you're looking for liquidity. You want to look at the open interest and you want to see thousands of contracts. Now, these are $5 wide. So for a $5 wide spread, you want to be paying 250 at max 255, because then if you pay 250, that means you can make 250 off of it. You pay 255, that means you can make 245 off of it. So let's see what if I place the same put spread in here. Let's see what now look how tight the market is. I'm paying 205, 208, right? Which is better. Like if you have a bearish position, but at the same time, Apple isn't stretched out to the upside like that particular stock that I was looking at before. So you're only paying 205, which means your max that you can make is 295. Now, me, if I came in here, right, and I looked at that and I'm like, oh, okay, 203. Hmm. That's generally telling me that there's skew one way or the other in the from the put side to the call side. Um, because I'm right here at the money and it's cheaper for me to buy this put spread. But it's cheaper to buy this put spread because of where Apple is. Right? You had this up move. Look at that big green candle. So all these stocks that I have on my watch list have this big green candle, right? To start this up move. So you're looking at this right here. So you get better pricing on that particular put spread, and the market is tighter. And when I say tight, I mean, put it back. Let me show you again why liquidity is so important. See how down here you got 205 to 215, 215 to 208. That's your market for that spread. So you know that it's a tight market. It's not wide, right? You're not giving up the market maker. He has, he has a 7 cent window or $7 window that he's working with there. So worst case scenario, even if you're a bad trader and you don't even know how to make, you don't know what you're doing, you're probably going to get a good feel in Apple. You're not going to pay up more than you should. Let's clear this out. Let's go back to what I was looking at before. I think that was CF Industries. Let's come down. Now I'm doing the same thing, right? You may say these options are just $1 wide because it's a cheaper stock. So I'm going in the money, and then I'm coming out. These are what are determined as in-out spreads, debit spreads. This is a long put spread. Yeah, many different names. Now you see when I came back and the market could have gotten tight. Now you got open interest right here, 7. I don't know if those were there before. What they had to have been because it's open interest. So it's not it. If it was volume, this would show me everything that's traded today. Everything at open interest was already there before today. And so you can see that you got 115. It was a buck. Now it just moved 115 to 220. So that means you got a whole $1.05 from the low to the high. That's $105. That's why you can drive a truck through that spread. So you can, it's very easy for you to lose if you're trading illiquid options, you can lose money just getting in and out of spreads or in and out of trades, period. I don't care whether you're just buying single options, because you can come right here and look. You got the ask is 480 and the bid is 390. That right there is 90. That's $90. That's a $90 difference. So you gotta be, and that's where I'm gonna look at AMC, and they may have tight markets now. Because I remember when this first occurred, like back when they had the meme stock rallies, the markets were horrible. They were horrible, and people were in here trading. And even now, you know, you got some action, but these aren't great markets. Now these are weeklies, and you can see this a $18 stock. These should be within 10 cents of one another at the most. But this is a weekly, so let's go to the monthly. I would imagine that the monthly, and then on the Thinkorswim platform, the monthlies are, as you look right here, you can see the white ones. Actually, the yellow ones say weeklies, right? So these are your monthlies. So I'm gonna open up the 42-day, and you can see it's real tight. You see right here. So you got about 10 cents. So the markets are pretty good at AMC. They weren't like that when the meme stock stuff first started, but now it's so liquid because there are so many buyers and sellers there. And you can come over here and look at the open interest, and you see thousands of contracts. So you can come in here and get something done. And my only purpose for that was just to show liquidity. Now let's look at AMC. AMC looked like maybe, hey, maybe it's found a bottom. Maybe. Let me go to the weekly chart. Okay. So now we got a little support. Let's do this. Let's do this. Got some support here, right? So the apes. So if you if you watching this and you consider yourself, you want to trade AMC, maybe you found a bottom, right? So you could get a little bullish, you can get a little pushed up in here maybe. It's possible. I wouldn't now because it has retraced so much of the move. I could see maybe playing this for a quick pop. I would not stay into this like long term and try to maybe you get a breakout over this high right here, take out this high, and maybe you get a little run up. You could get from 1808 maybe to $22. So that may be like a four. So me, how I would play this if I was gonna play this, I would do something like I'll probably put a stop below this low here. So that's what is that low? 14. Let's say call it 15. I would say 1450. So I'll put a stop at 1450, and then I would probably put a take profit at maybe 22.5, maybe $22. So I would take profit at $22, and I would probably put a stop at make it easy, $14. So you got $4 up, $4 down. Try to make about $400. Because if you get this breakout, if you get this takes out this high right here, I could see it running up to about $22. And then when it get up into this area, you're gonna get some resistance. Now I could see it continuing to go. I'm just not bullish on AMC. Let's see. They messing with me over here on my art um my art calls. So I'm gonna take this off because this don't even matter if it take out this low. But like I said, I got 79 days on it. So it's not like I bought something that I gotta have a move on within the next week. I paid up for it though, which I don't like that, but that's okay. So we can take a look at it. Let's go over to the Tastyworks platform. Let me see if I can share another screen. Is it going? I don't want to stop my sharing. I want to add another share. Uh, Y'all bear with me. I'm getting ready to share my Tastyworks screen. If it comes up. Uh, that ain't the way I wanted to do it, but that's it. There we go. I'll take that off of there. Here we go. That's why one of the reasons why I don't use both of them at the same time. Let's see. Here we go. Bam. Now, that ain't down there. Did it again. Bear with me. All right. Hide. Got it. Here we go. So you can see you see I'm down on the day by $80. You see here's my arc. Here's my call that I bought. Let's go take a look at it. Let's bring my watch list up. I was gonna leave that right there. So let's see. I don't have ARC on my watch list on here. All right, let's just go look at the chart. Here we go. I'm gonna have to load up my chart the way I want it to look. Load up my file. And a lot of this stuff, if you guys message me like you want to see me do some of this stuff, and you're like, man, what are you doing? Because I know I ain't talking through all of it. But if you want to learn how to do it, I can show you what I'm doing. All I'm doing now is just getting my chart set up. This normally is already set up, but because I was going through, I opened up in Thinkorswim. Now, if we're looking at art, let's go to the trade tab, and I'm gonna go to the option tab. Here I am, 78 days. I'm out in May, and I bought the 75 calls, right? So what am I looking for? I think when I bought it, obviously I'm down on it, so I must have paid, I don't remember, I think paid like, let's go back to the position tab. What did I pay? 364. There it is, right? So if it gets to 75 and it gets to in the money, let's look at, so if you want to know how much you can make on a call, right? All I do is I go straight to the chain. I don't need any type of calculator or anything. I go to the chain. So if it becomes in the money today, what's in the money? Right here. So here's the price. So right now, ARC is at 66. 64.22 would be in the money. So those in the money options are trading between 745 and 780. So if we got a run up and the market went up, I don't know, $7, $8, $9, whatever, it would be, this option would double. And that's all you do. So like, let's say it get down from 78 days to 50 days. What's the in the money options trading for 28 days from now? Anywhere between 520 and 645. So which means that I probably would put my sale for maybe 645, 600. So I probably would make 230 bucks, right? So that's all you got to do. All I did was move, looking at what in the money. And if you don't want to hold it there, which I probably won't, if I get an up move and ARC makes a higher high, so we got a low, high, low. If I get a higher high, I'll probably sell out of it right here because I bought the 75. Now, now you can say, well, what's the math around that, right? What's the math around that? Let me show you a cool little trick, and you can do it. You can do it on Thinkorswim and Tastyworks. I don't know about other options platforms. To me, those are the two best. Um, See right here where I got touch percentage. That's probability of touch. The probability that the stock price will touch a particular strike price. So the $75 strike, I got a 53% chance in the next 78 days of the stock touching $75. This is the cool part. This is one of the things that that I'd say, like, you could be great at technical analysis, or you don't have to know anything at all about technical analysis. You don't need to know anything at all. You can come right here and just be like, the math say, like, hey, if I buy this within the next 78 days, I got a 53% chance of touching this strike. I take them chances all day. Now, another thing you can do by just looking at the option chain, let's see where the majority of the action is. Got 2,000. You got 2,000 at the open interest right here. So a lot of other people are placing trades around this area too on the call side. You got another 1.91. See that K? So that's 1,000. And all the way back here. Now these calls right here, these may be, I'm guessing that if you see a lot of action out here, that people may be, I doubt people will, I don't know, some people may be coming out here buying these calls. What are you buying calls at 85 for? I think I know why, but maybe they think that it's gonna take out this high and get all the way up to here, right? And this would be, so if it popped and took out this high, the next support, next resistance levels would be right here. Right here where the market stopped and went up. This would be your next resistant level. And let's put something right there. Let's highlight it. I want to do a flat top. Let's do this. I would do it right here. Okay, see if I can keep it straight. I got OCD right there. Boom. So that will be your next resistance level. So you would get that up. And I'm looking at this wick. So that's how I'm looking at it. You got down, up. So right there would be a level, right? Down, up. Right here would be a level. Down, up, down, retest, up, down. This would be another level. Because price action came here, made us like a little triangle. And then let's see, let's do some trend lines here. So you got this, boom. Let's do another trend line. You got this. Boom. So that right there, come on. I want to bring you down a little bit more, right? So you got that little triangle there. So I would look at this area right here as another area of consolidation where we would probably get resistance on the way up. So this would be my first level, and this would be my second level. So you got people with options right around here at 85. And then you got a lot of action like right here where I'm at. So that means, I would think that the market may congregate around that area. I'm not for certain, but we'll see. And so with that, I'm gonna let you guys go, and then I'll sit around on the charts, and then maybe if I see something pressing, then I may come back on. This particular trade though, like I'm getting smoked on it, but I got 78 days. Now I won't hold this until I lose the whole $364. I'll probably put like half of it at risk. Once I get down to maybe $200, but that's about it. Because I'll know when I'm wrong. I have a certain spot where I know where I'm wrong. If it goes down past that spot, then I'll just get out of it. Or if I see Tesla getting killed, which Tesla is down right now too, which I don't like because that's one of the major holdings in that ARK ETF. Kathy Wood is really big on Tesla. And so I need, in this particular trade, Tesla would have to perform pretty well in order to keep that trade good. So with that, be safe out there with your trading. Right now, I got a red day going. But we'll see. We'll see if we can't salvage the day. A lot can turn around by the end of this day. And with that, hit the like button, hit the subscribe button, help me get to 1,000 subscribers. Any questions that you have, anything you want to see me do that you saw me do on Thinkorswim, comment on it, let me know, and I'll do something, do a video around it. And with that, I'm out, guys. Peace.